Hey, good morning, folks. Thanks for joining me today. It is Thursday, the 18th of September, 2025. It is episode number 2688 this morning of our TraderBite. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you doing today? How'd you handle the FOMC yesterday? A little whipsaw, whiplash, and balance. Let's get into the pre-market summary sheet here from, sorry about this. 1 second. How do we do this? For some reason, my screens keep shifting. Just 1 second. I'll be right back. Okay, we should be back. Can you all hear me? Let me know if there's an issue hearing me. Here's the pre-market summary sheet again. We have risk on sentiment. The market has really pushed higher and is coming off pretty strong now. And overall, the kind of back and forth continues. Again, risk on. Jobless claims came in lower than expected, which is somewhat bullish. And the Philly Fed came in higher. BOE leaves rates unchanged as expected. The FOMC left the FOMC cut rates 25 basis points. I'm not sure why it's saying it left rates unchanged. And what's left for today is the CB leading index at 10. And then a few things, JFK consumer confidence, GFK consumer confidence out of the UK at 7 p.m. Eastern U.S. time. Inflation rate out of Japan is important. The relative range and relative volume pretty strong today. The auction's quite active, and that's what you need to know. This is important to pay attention to right here. This heat map, it's telling us that there's pretty active price discovery on good volume. So this is one of those mornings where you'd want to watch the open and be present rather than, another lackadaisical kind of opening. So that's what we've got. We've got movement across the universe of macros as well. So the 10-year note, 30-year bond also moving quite a bit overnight. Gold moving a fair bit. Gold is off below 3,700. The S&P is in a multi-distribution profile and is in a free fall currently from the rally overnight, which started around the European Open. Volume is pretty strong, 224,000 in the front month, 224,000 contracts, pretty heavy. Remember, one standard deviation, the first standard deviation, or what we would consider to be normal for the S&P at the open, at exactly before the open, at the end of the overnight session, is 220,000. It's very likely to hit that because we're at 203,000, 204,000, although for the front month, it's well above that, 226,000. So what have we got? We have inventories 100% long. We're way above. We reopened above prior settlement and have pushed higher and continue to hold these higher prices. Again, it's coming off now, but that's what we've got. Let's take a look at something else. This is yesterday's video. I show that the market is likely to pull back. When we were talking, it's likely to pull back and kind of come off. I wasn't expecting the market to push through that 66.80 and hold above there yesterday. The expectation when we were talking, it had already put in the spike low and it had already tested and started to move back up. So the expectation was it is likely to push either into the overnight DGPs at 66, 69, or push all the way up to, I was okay with it pushing all the way up to 66.80 and still considering it relatively bearish for the open. Here's what actually happened. So this is where we opened yesterday. Here it is. So, we had it pulling back up when the TraderBite was done, which is in this region right here. It pulled back up. It almost pushed into that 66.80. The open poked up into 66.76 basically, and then immediately fell off, pulled back to the DGPs, and then started to walk its way down to take out the overnight low. The overnight stat was done. It was pretty choppy, as you would imagine, with the FOMC coming. And then the FOMC comes in. The FOMC SOC, or the scene of the crime for the FOMC, was 66.65. And then, it flashed up, flashed down, spiked down from the upper square, which was here. Remember, this is the kind of the upper balance zone. The upper balance zone, and it was falling through into the next, the upper balance zone. It was falling through into the next region, and it managed to push through to the next region. That's what these green bands are highlighting. They're highlighting the blocks of balance. I covered this quite a bit yesterday. Please go back to yesterday's video, which you can find on my YouTube channel. Just go to youtube.com, search for Futures Trader 71, and it'll send you to the channel. You can watch yesterday. I spent the entire half hour going over how this auction process works and why it's really important to understand. Then what we ended up doing, so let's, this is quite zoomed out. We had balance here, imbalance overnight, but then we came back the day after that. We put balance in line. So this is where I was talking yesterday about, hey, this looking like it's rounding over, right? Yesterday, it spiked up. It spiked down. We have an excess low, but it ended up being balanced. If you look at the bars, these bars after the FOMC, they overlap each other. And overall, we ended up in balance, and we ended up dragging the point of control lower. The point of control is this little white line right there. The prior point of control is right there. The prior point of control is right there. So you could see that value is stable here. So value has moved from here to here, to here, to here, to here. And this is kind of like what I was looking for in this kind of rounding off. When we put highs in, swing highs, not all-time highs, when we put swing highs in, it generally doesn't just go, come off, and then it's done. It's generally done in a rounded process, and that's what I'm looking for. Now, all of that kind of gets shot out of the water, basically, based on the fact that we opened in Globex and we pushed right back up to this upper band, consolidated in the upper band, pushed through, pulled back to the upper band, and then we took out the double TPO high. We left in the overnight session a couple nights ago at 97 or 96 something, 96.75. We took that out, so we cleaned up this weak high, this double TPO high. We cleared the 6,700 in a parabolic move in the overnight session, really in the European session, and since then it's been really flagging, right? And normally in a parabolic move we have a flag, which is a pullback, and this is where we stock for a pullback continuation trade on a long bias, and then it breaks to the upside. Our risk comes off at the prior high on an entry in the pullback somewhere, and then everything else is a runner. What it has done, though, it has flagged and it has come right back, and we are really at the high trading at the high of yesterday. So we were expecting to open in a gap into new all-time highs, which, if you remember from last week, what did I say? The tradition has been when it gaps to new all-time highs, it has a hard time for that session sustaining those higher prices, and the expectation is that it would responsive sell at some point on or after the open. And essentially, that's the market's kind of taken that away from us at the moment. We are below DGPs. We have a multi-distribution. Look at the distribution on this profile. Very active price discovery. Do y'all want me to draw that cigarette that I used to always draw when a profile looks like this? The dude's smoking like that, a little bit of ash, the filter, and some smoke like that, because he's a cool guy that trades and smokes, right? Anyway, a little bit of fun there. So we pull right back, quite an impulse down, breaking the DGPs, falling back into the Globex range, coming right to the high, to the highest high we've made so far this year, and we are floating around in here. So we are likely to open in a minor gap. And so what do we have to do? What's the plan of action for day trading this? The plan of action is to determine whether gap rules apply or not. And whether gap rules apply or not is a function of how far above the prior range, day range, we open. If we open greater than one range extension, meaning at the current moment, a range extension is 8 ticks or higher, then we have to treat that as a gap. And now we're looking for, is it a gap and go, meaning it's initiative? Does it gap and continue higher? It gapped up, so initiative is to continue higher. Or does it gap and revert, which means that it gaps and is not able to push higher and it falls into the prior day's range? Couple of things to note. Because the prior day's range has balance in it, which is amazing given that the FOMC took place yesterday. We generally don't have balance in an FOMC. You're going to have to pay attention to value. The key items that are going to be important if we fall back in the gap are value high, VPOC. That is the most traded price of the session. Settle, which is right here, the prior settlement. So P settle, we call that. P settle. Value area low. These become the key test areas that we're going to look for, and those become the key test areas that we are going to trade from if it gets back into the range. So because we're in balance, balance rules apply, and that means we have to pay attention to value. And there was quite a bit of volume yesterday. Value is legitimate despite these spikes above and below. And that's what I'm looking for today. So if it decides to open and come back in, I'm looking for a bounce at value high. And if it cannot hold a bounce at value high, it goes down to the VPOC, which is down here. And then the prior settle becomes a high probability trade, and so on and so forth. So if I'm going to trade with the trend, in this case, the trend doesn't really exist. There's not an imbalance to the buy side anymore because we broke. Again, we broke one-time framing up. We don't have one-time framing down because yesterday it kind of traded the entire range. It traded outside of these 2 days. We don't really have a day-to-day or market imbalance. So to me, these are likely to be reversion trades, balance-based trades today. So I'm going to be looking for it to just revert back to balance. Every time it moves away from balance, I'm trading from the outside in towards balance, and VPOC, prior settle, value area low, and so on and so on and so forth. The expectation is if it falls back into this box, it's probably not going to get through it. And that's how I'm looking at the S&P. If it opens tries to pull back and then gets an impulse, meaning a wide-ranging rotation on a short time frame chart, I'm now going to look for weak pullbacks in the direction, opposing the direction. So the impulse happens up. I'm looking for a weak pullback, looking for an area to define risk, look to enter, exit your scale and risk at the last high, hold the runner to see if you get the overnight stat at the high, right up there at 67.1975, basically 67.20. That would be the long trade. I'm leaning more on most likely it is falling back into the FOMC range for this morning, but we'll see. I'm doing this TraderBite today because I'm tied up with the kids tomorrow. My wife is going to be busy attending her PhD course, and so I have to get them ready, take them to school and so forth, and that interferes with this time period of the day. I won't be trading the open, so I figured I'd do today's video today, or tomorrow's video today, and then you would have something. Here, I want to talk a little bit about crude oil. The Nasdaq, same positioning. I covered the S&P because it's the most popular. It's probably one of the better products to learn on. It's more methodical. But the Nasdaq follows the same stuff. The Nasdaq is remaining a little bit more bullish. You could see that it's well above yesterday's high. So the Nasdaq's very likely opening in a gap, and it's a question of, does it clear the DGPs here, the full session VWAP, full session mid, and fall into this box here or not? Nasdaq going to be watching for the same thing. Let's talk crude. Crude has rolled to November 2025. You should be trading the CLX as an X-ray 5 contract, CLX 5, and that's what I have charted here. The premium adjustment for everything prior to today is negative 35 cents. The back adjusted premium for crude is negative 35 cents, which means that crude is in backwardation. So crude, if you look at this, we've adjusted these levels to that 35 cent premium difference. There's no gap in this chart. These highs and lows are correct. And here's the balance zone that we've been in basically so far in September. And what we talked about is, hey, it keeps checking and falling in. Yesterday, it pushed and it held, or day before yesterday, it held this point of control higher. Yesterday, it had basically an inside day. Despite the Fed, it had moved balance lower. So it is starting to retrace, as it often does, back into the range. But I believe this is the new normal. The new normal for crude is going to likely be right here until this stock zone there. This becomes the new square that we're in. We're forming pretty decent balance up here. Crude is looking somewhat bullish overall because it's broken out of balance to the buy side, but it's moving in such a choppy way that it's a little bit frustrating to hold on to anything in crude currently. So I'm looking for short range areas to secure risk. I'm not looking for huge runners in there or anything like that. But crude is on its way to squeezing into the next test area up at 65. If you recall, crude, every time it pushed through 65, it would fall back through, but now it has gotten out of this lower balance, so I have to respect that and look at the facts, and the facts are it is tiptoeing, dipping its toes into that prior balance, but overall it's staying quite supported above 63.50, above the 63 range basically. So the expectation is eventually it is likely to release essentially what we have as one of these kind of things setting up. So crude looks like it's likely to be bullish, but this morning, the overnight session had this weird distribution with the point of control at the high, weakish high. It's a double distribution profile, and it tried to push lows, and you could see that they came right back in and bought it back up. So I'm expecting that to continue. I'm expecting crude to surf its VWAP and continue to squeeze higher over the next few sessions. Tomorrow is options expiration, triple witching Friday. Once that's done, we come back Monday, and the trade is likely to be a little bit cleaner in terms of volume with the expiration behind us. Okay, cool. All right, I'll leave you with that. Don't forget to subscribe to the channel and set your alerts on there. Would love for you to like this video so that other traders can find it when they're searching for futures. They can find this content. If you want the direct link to go and subscribe to the channel, just type ft71.com/YouTube, all lowercase. Cool? I'll talk to you on Monday. Good luck. Mind your risk. Follow your process. Don't chase the money. Chase the process. Good luck.